Good afternoon. This is Clark Neighbors with BIS Commodities with the market recap for the week ending May 1st. Happy May Day. A lot of the world trade is on holiday today. Let's kind of summarize what we've seen this week as far as the grains are concerned. May corn for the week down 5 cents. December down 8. Beans virtually unchanged on the May and down 12 cents on November. While we continue to see pressure on the wheat, down 16 cents. Now for the month of April, May corn down 14 cents, December down 18, May beans down 5 cents, November down 15, and wheat down 42. Just a couple quick notes. December corn earlier took out 395, now hovering around 380. Keep in mind, 395 area looked like pretty good support. Typically old support means new resistance, so from a selling standpoint for producers, any type of move back up in that area is warranted. Nothing new on the Russian wheat export tax, but that seems to have added some pressure to the wheat trade as we've made new contract lows on the wheat this week. These would be numbers going back for about 5 years. And lastly, on D's corn, also keep in mind it's the lowest level D's corn has been since last October. Beans continue to try to hold nearby support, and we'll see how that plays out. But so new contract lows in the wheat, new recent lows in the corn. Beans trying to hold recent support levels. Very quiet trading ranges, fairly low volume. Not a lot of new news on a day-to-day basis. The main topic or talking point currently is planting progress. Obviously, the weather this week has been nearly ideal in many areas and improving in most others. Corn planting progress is going full force basically in the entire Midwest, finishing up in some areas, getting a good start in others. Most feel the trade will show, the USDA will show something around 50% completed on Monday's report. Reality is it's probably higher than that, but that's always the case. Normal for that date is around 40% complete. Now, keep in mind there's a pretty strong correlation with corn planting by May the 10th, and how that interprets potential statistical values. Something at or above trendline yield is a better possibility. Planting on beans, most are looking for 10 to 15%. It looks like on the forecast going into next week, we're looking at pretty good rain possibilities, especially in the northwestern corn belt and down through the plains, even into the southern plains. That will create some rain in areas that haven't had as much in some cases, and keep some of the areas that have been a little dry, been a little wet, with a drier forecast going into next week. We'll see. But planting progress may slow down next week, but we're in that transition time frame from corn to beans. Cash markets on corn continue to be very strong, and also beans. No deliveries against the May contract on corn. Really light on beans thus far. Movement continues to be very light, to the point where even here in Cedar Rapids there is a 24-cent premium on corn for the month of May versus the month of July. So producers that are holding corn on farm waiting for better prices, keep that in mind, because there's a big premium today versus July. So understand the basis and what that means. Ethanol margins continue to be pretty good. The other story to watch, and it's more of a psychological impact on the markets, is the bird flu. Yesterday, Thursday, another 5.5 million birds in Iowa were found to be exposed to bird flu. May 12th, a week from Tuesday, is the supply and demand update by the USDA, and the significance of that report, it is the first report where we will see a S&D estimate for the 2015-2016 crop, so that will give us a nice basing point going forward for the new crop. Again, movement continues to be quiet. Tremendous amount of old crop to move at some point, And that's a thing moving forward as we get into the summer months and prior to harvest, how this all plays out logistically. On the big picture on the macro markets, U.S. dollar index, in the last 6 weeks we've been from the high up around a little above 100 down to recently this week below 95. Had some bounce today. During that same 6-week time frame, crude went from the mid 40s to up near 60. So that reverse correlation of stronger dollar, weaker commodities, and vice versa. So I think that's held some stability in this commodity trade, believe it or not, over the last few weeks. Stock market's near its highs. Livestock market had some pretty good moves to the upside on hogs this week with thoughts of higher cash trade. And cattle market this week looks like 160 traded in the south. That's $2 to $3 higher than a week ago, supporting the cattle market here this week. Again, 2-3 things to watch here in the near term. Fairly quiet as far as market movement, tight trading ranges, planting progress, and then transitioning that into late spring, early summer weather. The lack of marketing, the lack of movement, keeping premiums on this basis, and then also the reports going forward with the May 12th S&D as the next one to watch. If you have any questions, feel free to call us in the office. Phone number is 800-373-2525 or BIScommodities.com. And with that,